Hi everyone. In the last session, we have discussed the introduction part and types of underwriting. Let's start second session. This session will cover SEBI guidelines for underwriting, marked and unmarked applications, and calculation of underwriters commission. Let us go for that. The objective of this session is to familiarize the students with the concept of underwriting. The session outcome will be the students can be able to understand SEBI guidelines for underwriting, marked and unmarked application, and the calculation of underwriters commission. First, we'll understand the provisions regarding the payment of underwriting commission. What is the certain conditions and provisions are there? Let us discuss that. The consideration payable to underwriters for underwriting the issue of shares or debentures of a company is called underwriting commission. Whatever the amount or consideration payable to underwriters for underwriting the issue of shares or debentures called underwriting commission. The underwriting commission may be paid in cash or in fully paid shares or debentures. It is generally calculated at a specified rate on the issue price of whole of the shares or debentures which are underwritten. Section 76 of Companies Act lays down certain conditions relating to the payment of underwriting commission, which must be complied with certain conditions. The payment of commissions is authorized by the Articles of Association. The commission paid or agreed to paid must not exceed, in case of shares, 5% of the issue price of the shares or the rate authorized by the articles, whichever is less to be taken into account. Whereas in case of debentures, 2.5% of the issue price of the shares or the rate authorized by the articles, whichever is less. Totally, the commission paid or agreed to paid must not exceed 5% of the issue price of the shares, whereas in case of debentures, 2.5% of the issue price of the shares. This condition to be fulfilled. The amount of rate of commission should be disclosed in the prospectus or statement in lieu of prospectus, as the case may be, or in the statement filed with the registrar before the payment of the commission. Totally, the amount of rate of commission should be disclosed in the prospectus or statement in lieu of prospectus, as the case may be, to be taken into account. This provision or a condition to be fulfilled. Next condition is the number of shares or debentures which persons have to need to be subscribed absolutely or conditionally should be disclosed in the prospectus. Which persons have to be need to be subscribed absolutely or conditionally, it has to be disclosed in the prospectus. A copy of contract relating to the payment of the commission should be delivered to the registrar. About the commission, about for payment of commission, the copy of subscription contract relating to the payment of the commission should be delivered to the registrar. That condition also to be fulfilled. No underwriting commission can be paid if the issue is privately placed. So the commission will not be paid if the issue is privately placed. It has to be placed in the public. Then only the commission is going to be payable. These are the provisions to be understand while payment of underwriting commission. You must understand the commission or consideration. Commission is a consideration or an amount payable by the company to the persons who underwrite the shares. The provisions totally in case of shares total percent rate of commission in case of shares 5%, in case of debentures 2.5%, and all those conditions has to be fulfilled, then only the commission is valid. Let us come to the mocked applications. For the purpose of identification, where the company received many applications from different persons, the official stamp will be bared by the persons for the purpose of their identity. Let us understand mocked applications. The applications received by the company bearing the official stamp of the individual underwriter or the respective underwriter are called marked applications. See, the issue of shares or debentures of a company is underwritten by more persons, more underwriters, or two or more underwriters, to determine the liability of each underwriter. It is very essential for the purpose of applications of our shares or debentures should bear the official stamp of the underwriter. Hence, marked applications. Those applications will bear official stamp. Whereas in case of unmarked applications, it is reverse for the marked application. The applications received by the company directly from the public, which do not bear the official stamp of the underwriter or underwriters, are called unmarked applications. When the issue of shares or debentures of a company is underwritten by more persons for the purpose of determining the liability of each underwriter, the applications, it may become necessary for the applications for shares or debentures. Where it bears official stamp, it becomes marked applications. Where do not bear official stamp, it becomes unmarked applications. The unmarked applications for the purpose of determination of net liability of underwriters, the treatment will be varied. Hence, marked and unmarked applications to be taken into account for calculation of total liability of underwriters. For calculation of unmarked applications, the total application received and minus total marked applications to be taken into account. Out of that, marked applications to be deducted. Let's go for calculation of underwriters commission. How to calculate underwriters commission? As I explained in the provisions for payment of underwriting commission, the commission will not should not exceed in case of shares 5% of the issue price. In case of debentures, 2.5% of the issue price. Like that, issue price of shares into rate of commission to be taken into account. While calculation of gross liability, sorry, net liability of the underwriters, where it considered for calculation of gross liability in case of commission, when underwriting commission becomes due to the underwriter, an entry to be passed, commission on issue of shares or debentures accounted are, commission on issue of shares, issue of debentures accounted are to underwriters account. So, for this calculation to be done, it goes for advantage of underwriting. A company is relieved from the trouble of raising the required capital. Will the first one, the company is relieved from the trouble of raising the required capital. Every company wanted to raise liquid capital. Due to the agreement with the underwriters, they will relieve from the trouble. The subscription of capital of the company becomes certain because of definiteness. subscription of capital of the company becomes certain. A company need not bother about money market conditions, whatever the condition it may be, due to the definite the underwriters will subscribe the shares, hence no bother. The company can get the required capital within a specified period of time. After IPO, whatever the agreement done by the underwriters, within a specified period of time, they are going to subscribe. Hence, that is the merit of the underwriting. The underwriters provide export advice to the company with regards to the issue of shares and debentures. Due to their experience, they will give expert advice to the to the company. In this session also, some of the MCQs are there. We'll go for that. The next session will understand how to calculate gross liability.